We're going to talk about manufactured housing loans. This comes up quite a bit. With the manufactured housing, it really is treated differently than a regular stick-built home. It's not as easy to get the loans on the manufactured housing. They just tend to see, the lenders tend to see a higher risk involved with it. So the guidelines, rules tend to be a little stiffer with the manufactured housing. One of the things with the manufactured housing, it has to be on your own land. It can't be in a mobile home park. You have to own the land. It can't be on leased land to where, let's say it's on Indian land and you have a 100-year lease on it. That's not going to be something the bank's going to want to loan money on. You have to own the land. That mobile home has to be taxed as real property, not personal property. Personal property would be that you're paying registration on it. With real property, that means you have a property tax that you're paying to the county on that particular manufactured property. They also have to be on a 433 foundation, which is referred to as a permanent foundation. It's an engineered foundation that goes underneath the manufactured home, and it's considered permanently affixed to the land that it's on. There will be the necessity to get a structural engineer out there, check out to make sure that the 433 foundation is right, and sign off on a structural certificate that that's acceptable. One of the other things that the lender will make it mandatory is it's at least a double wide. Some of them will also say it's got to be at least 1,100 square foot. Single wide manufactured property, nobody will lend on it. The age of that property, it has to be June 15th, 1976 or newer, and that's because HUD standards kind of became the thing at that point in time. And in these manufactured properties and on each section of it will be a HUD tag, and hopefully those are attached. When they're not attached, you have to go through another certification process. It's more money involved. They got the HUD tags on there, and you need those tag numbers from HUD to be able to get the lending on these as well. So no 1976 or newer, and they had to be placed on the property from the dealer or from the manufacturer. You can't buy or get lending on a manufactured property that's on a piece of land that had been moved there from another lot. So let's say person A bought the home 20 years ago and then decided to build a stick-built house, and somebody down the road bought this manufactured and had it moved to that property. Once it's moved, even it's on the 433 double wide, meets all the other things, because it didn't come direct from a dealer or manufacturer, it came from somebody else's land, banks won't loan on it. So that's something important to check out and know, how long has it been here? Did it come here originally? Good questions to ask before you're getting into making an offer on it, because you don't want to have it fall apart later on that. On the certification process for the data plates, I've had experience in having to go through and get that. It's a headache, but more importantly, it's time. And you can figure that's going to take 2 weeks to get straightened out if those data plates aren't on the manufactured home. In this section of the module, I'll make sure that I have an example of the pictures of what those data plates are, so that if you're looking at getting a manufactured home, you know what you're looking for. And they stand out. Some of the manufactured homes will have vinyl siding or something on them, and it's covered up the original plate. That makes it a little harder to find inspection-wise, but aside from that, if it's got the original paneling, you should be able to walk around and see that tag. So I'll make sure I put an example in there. Another thing that I want to mention on the manufactured lending, because they're associating a different risk with it, you're going to look at FICO scores. They just decreased them, so you can have a 620 FICO or better for the majority of the programs to be able to get the manufactured lending. The debt to income ratios have to remain at 45%, and you can't go with a manual underwriting. With the underwritings, we have there's an electronic automated underwriting system that pulls in all your information, and it kind of goes through this matrix, and then it determines, yes, you're eligible based on what's been input here, or you're referred. And referred means they just weren't able to have enough clarification to say, yes, you can get the loan. So then it has to go manual underwriting, which means a human being is going through looking at everything. And that's okay. If it works and all the numbers are there, I've helped clients go through the manual underwriting process and haven't had a problem. In regards to manufactured housing, they just won't allow a manual underwriting to go through and do a manufactured loan. So one more thing to keep in mind in there. They're different in terms of getting a loan on. People like them. A lot of times that's all you'll find in a rural community, and somebody wants to have 5 acres of land and be by themselves and be out there in the country. And oftentimes that's the easiest thing to put out there is a manufactured housing. So it's either buying a new one or one that's been there, it's an existing. Just know that if that's what you're wanting to buy in the area that you're going to be in, there's going to be a few more hoops to jump through. So be prepared for that. And if you're buying it from somebody that's already been there, they should understand. Unless they paid cash for the house, they had to go through these same hoops too. So just know they're there. Be mindful when you're making an offer that maybe we can't do this in 30 days. We might need 45 or 60 days to get through this escrow. So keep that in mind as well. Okay, that's it on manufactured housing. Hope you learned some good stuff here.